Howdy, friends. Steve DePaul here with the Rose Realty team with this week's Real Estate Vlog for North Texas. Today, the homeowners insurance guide. Now let's face it, nobody really likes to talk about homeowners insurance, right? It's like going to the dentist, or it's like talking about health insurance. It's like planning for something bad, right? Well, it's actually true, okay? Homeowners insurance is actually sort of planning for the worst, planning for something bad. We never really like to talk about that, in terms of your house, weather events, fire, theft, broken pipes, those kinds of things. We never really like to talk about them, but I've got 3 tips for you today that maybe could help you with that planning and help you with a conversation with your insurance agent. So let's get down to number 1. Do you have the right level of coverage? Now, if you bought a house, let's say 2 years ago, 2.5 years ago for $400,000, okay? That house, depending on where you live, that house likely today is worth $650. And probably when you bought that house, you got homeowners insurance, right, for $400,000. But the value of your house has now climbed the last 2 years to now $600 or $650. Depending on where you live. And so what you want when you have that homeowner's insurance or the homeowner's policy is the policy to rebuild your house should something happen to it, like a fire or burns it down or something along those lines, or it gets flooded out or what have you. And so you want that rebuild policy. Now, when you got your original policy for $400,000, the next day, if it burned down, it'd be $400,000 to rebuild it, okay, 2 years ago. But now it's worth $650, and that $400,000 policy isn't going to rebuild your house today, okay? So you have to do an assessment and evaluation to see how much your house is worth, the value that it's increased, and take into consideration the increase in the supply chain costs, okay? And you'll have to increase the value or increase the value of your homeowner's policy to cover that additional value should you have to rebuild. Now that means added expense. Yeah, I get it. That means added expense to either your mortgage and escrow, or at the end of the year when you're paying cash or check, what have you. But you know what? It's better to pay, a couple extra $100 or $1,000 every year, rather than have your house burned down or something catastrophic happen to it and find out, geez, I'm only covered for half. Man, that would really stink, wouldn't it? So you have to make sure you have the right level of coverage. What about any additional coverage, right? So you have the coverage on the house, and that usually covers a certain amount of stuff inside the house, furniture, clothes, those kinds of things. But it doesn't cover, other stuff like jewelry or collectibles. And is your insurance policy also cover you for stuff like, earthquakes and floods? Okay. Now, earthquakes, we kind of laugh at a little bit here in North Texas, but they do happen. Okay. And how about floods? Did you know, here's an interesting factoid. So floods is the #1 claim for homeowners who live outside of flood zones. Now you got to let that sink in for a minute. The #1 claim homeowners make on homes outside of flood zones is floods for their house, right? So you have to do an assessment, take a look at the CoreLogic flood maps, and if you need some help, give us a call. We can help you out, let you know where you sit with that. But additional coverage, gap coverage, you may want to call it, is going to be important to make sure that you cover not only that the house is fully covered, but the stuff inside the house, like collectibles and jewelry and all that kind of stuff. The Picasso you have hanging in your in your office, that's got to be covered. Okay, don't laugh. We actually knew people. We had friends who had a couple of Picassos in their house. So don't laugh. And then it's reassess every year. Okay, so like I said, look, every year, either at the beginning of the year or at the end of the year, you should reassess your homeowner's insurance coverage to make sure that you and your insurance agent are in sync, in step with the value of your house and what you got going on there. So Did you put on a pergola? Did you do something bigger like an addition onto the house, an extra room? Did you do special roof tiles or shingles or what have you? That's reassess every year. Yeah, and I'm not, like like I said, the crummy thing about that is if you reassess, chances are that means your policy, premiums are going to go up, but it's better for the policy premiums to go up a couple hundred or $1,000 a year rather than to get caught short at the end and your house burned down and find out you're only covered for 400 and your house is worth 650. Okay, where are you going to come up with that extra 250? GoFundMe? I don't know. Anyway, reassess every year. I hope that was helpful. Next week, we're going to talk about the Keller Williams Go Management for a Homeowner program. Really interesting. It can help a lot of you out today. This is Steve DePoe with the Rose Realty team. I'm going to bounce.